Welcome to Trading Lounge and the Australian report for Tuesday, December 21st. And as you know, we're on the daily chart here. We're looking at this Elliott Wave Triangle pattern through here. And it hasn't been easy, and it hasn't really presented any good trading opportunities. Very sort of a bit of a rough diamond, really. I still think there's lower to go based on CBA, so we're looking for a move up basically, and then a move down here. And I'm looking at it, this is the ABC pattern in here, and going to the 4-hour chart just to look at that a bit closely. It is a bit rough, but 1 and 2 and 3 and 4 and 5 here, and we're looking for this B wave up here, but I wouldn't expect it to be too big, something like this, and then we'll move down through here, and that would be based also on the S&P 500 or the US market, and also CBA as well. So if we look at CBA for a moment, let's just catch up to where that is. So we were looking for the A wave here, an A and a B and a C wave here. So we're in that little move to the upside here for wave C, and then we're coming down. So that's our pathway for the market in general, basically probably for the resources to a point, but more so for the financial side and the index. So let's just go in here to the tick chart and pick this up from here. So from the A wave here, we're looking for an A wave and a B wave here, and then we're looking for 5 waves up. Okay, that low's there. Sometimes you've got to check in case that was 1 and 2, but that's okay. So yesterday we were looking for wave 2 to pull back, so I guess we can look at that in a way being done. Does look a bit like 5 waves here though, doesn't it? Like 1, 2, 3, 4, 5. We might need to be a little bit careful about that. Where's the 50-60% retracement level here for that? Just a tad lower. So we could end up taking stops out. So having this as the A wave. Oh no, I see it now. So that's the A and the B wave here, then 1 and 2 and 3 and 4 and 5. We've still got that. Might just go to the 5 ticks and just check on that for a moment. Let's just have a look inside this situation. We've got 1, 2, 3, 4, 5 here, ABC here. Then we've got 1, 2, and that's a little 4 in there, so we can go 3, 4, and 5. It does look like 5 waves, unless that's a B wave here with an A and a B and a C. That doesn't work, so that looks good as a 4th wave. I think we could get another little move down. We could get something like this, So I think we just need to accommodate that. Let's go back to our 100 ticks for a moment and just soak that up for a second. So it is possible to have this come back here. I could look at that as being impulse or bullish. I think we just need to be careful. We could get a drop to here kind of thing, you know what I mean, like close on the open or something because of the US markets being down, and then push up into that space. Yeah, but because we've got 5 waves here, after correction we should get another 5. So yeah, I'm not quite sure how that will play out actually, but and then if we look at this here, the length of this here, we would expect wave 3 to be longer. So I'll just pop that there. Delete this one. So yeah, I don't know about that little bit. It might be some, like a gap on the open and then recovering. It's quite typical of some sort of short squeeze thing. But yeah, we've still got further to go to the upside here, so that can it might not even be until tomorrow we get up there. It might be even, well, say one day here, another day here. So it could be 3 days to get to that point. Yeah. I mean, it's not like we're in a fantastic trend or anything here. There's not a lot of money to be made. The other thing here too that we need to be careful about, this could be the A wave here, the B wave here, and the C wave here, you know what I mean? And that's done and dusted. I don't think it's the case, but we've seen weird stuff before. We're all a little weird, as Shakespeare would say, in his own way. So, yeah, okay. Well, look, we should be heading up here for that. Yeah. Let's just go back to back here a bit. You could probably safely short it under this here. I know that's a long way away from where we want to be, but I know that that's like a little move up here for an A wave, a B wave, and a C wave here, but it's too small for this B wave here, so I would expect more here. I'd probably just take that away for the time being. I'll leave that up to you, okay? And if you see that weakness come in there, but the B waves can get complicated. I mean, this is all the whole thing is complicated. So it's just all complicated. So, but I can see we've got like a little ABC here, or up for 1 and back for 2 and 3 and 4 and 5 or something. We won't be coming too far up here. I mean, technically speaking, we can go higher, like CBA. We can go up here. Will we get there? I don't know, because the US Indices are going to drag us down in the off hours, I would think something of this nature, even struggling to get there and then coming down here. Yeah, I know that I haven't been much help in all of this, but I just have pointed out that it's tough, and it's not like we've got the resources going one way and the banks going the other. They're kind of harmonious to a point at the moment. So we should see a better run, but this whole thing's just vibrating into a particular price point. So, okay, so yeah, once again, I just don't see a nice trade in the banks or even the even the resource stocks that we're looking at. Let's just cruise over and check on them. I'll just check on ANZ first. Okay, so we've fallen out. So we can have 5 waves up here, 1 and 2 and 3 and 4 and 5 in here. So a little ABC here at the moment. But I wouldn't be surprised if we do come down to the 25 here, because we still got further to go down. We'll just see how this holds. I mean, when you think about it, ANZ has held very nicely. It hasn't really dropped like CBA has. Obviously, it's got other assets, in different countries and so on. So slightly different, but yeah. Anyway, we're not ready. We need the ASX2 before we can go long in the banks. We need the ASX200 to finish its wave 4, and we're not there yet. I would, yeah. Anyway, we'll just wait and see a little bit further with all of this. I mean, the only other count, because this here counts as an A and a B and 5 waves down here. So it's difficult to look at this as wave 1 here and 2 here and 3 here and 4 here because of the overlap, So I just need to wait, I mean, yeah, I won't change this count unless this market drops down into the 2650 area here, the lower end of minor group 2 area. So nothing really to have there, I can't see anything. The iron ore, it did pop up a little bit yesterday, which is good, because there was was expecting. So from wave 4 here, I can see that we're looking, I better double check, I'll check on the tick chart in a moment, but we were looking for one more little high here. So they could, I mean, it's a bit rough, but we know that that's no problems with the A wave here of being wave 1 or wave A. And then this one here has got more sort of form in it, but it can be finished at that point. So it'll be interesting to see if we can, if we can push up from that place, or do we need to come back here first? And so, but there is a rough little 5-wave structure in this space. I just want to double check that before we go off. It's pretty rough. An A and B and a C, and that was the one I was looking for to make a new high above here. So, I mean, this is the point where I want to see what happens here, and also we're at the 700 here, which is nice as well. But I do think, I mean, we could probably extend. I could probably stay within the wave 3 I've got and have a look at this as 1 and 2 and 3, 4, 5 up here. That's possible. But I'll just see how it all travels, because what I'm looking for here, that will only go to 720 there. Well, what we need is this here. We need a classic trading levels pattern here. And then once that there goes, then I know if we get this situation and we push up from that point, then I know that coming back to the daily chart here, I know that we can start looking up we could still be corrective, but we could look up higher here in the 50-60% retracement level area here, up at, closer to the 900. If we can move past this 3-wave move here and turn this into a larger impulse wave, that would be one thing. And then it will make it easier for the stocks. And so I don't really have much to say about the Australian resource stocks at the moment. BHP here, we've got a couple of positions in here. We're just... until I work out the count's got to come from somewhere, and it's got to come from the iron ore, because we're looking at BHP, and I mean there's copper there for BHP of course as well, and we know copper's bullish in the bigger picture. We can just have a little look at copper, and we normally look at it in the other one, but so copper here, I mean, this is definitely a corrective pattern here. I just don't know how it's going to finish off here that well. I'm just need to wait for an impulse wave, but we're in the later stages of it, a bit like gold, really. And I think it's got to do with the US dollar partly. I mean, there's a lot more to it than that, of course, but yeah. But we're in the later stages of this. Yeah, I'll have to stay with the triangle pattern. Anyway, point being is this is bullish, so it'll help us after Christmas anyway with that, So it's good for BHP. I just know this count here could be counted corrective or impulsive, just like iron ore, so I'm not there yet with it. We could also have another leg down here for this as well, because it does look like this is impulsive here, so an A and a B and a C, and then another test for the up there. If the 40 becomes the retested resistance, like vibrates here and becomes the resistance, then we'll move out of this market. But in the meantime, I think we're okay with this. We'll just stay where we are. And it's the same for Rio as well. So there's Rio here. It dropped and pushed up, so that's all good. We're looking for a little 1, 2, 3, 4, 5 for 1 and 2, 1, 2, 3, 1 and 2, 1 and 2, 3, 4, and going up for 5. I've got overlap there, so that could be wrong as well. So it's probably also 1 and 2 and 1 and 2 at that point too. But still, we, in the bigger picture, we want this sitting on support. We want to give this space, and the space it's going to get is between group 1 at the top and group 2 below. That's the space that we're going to give it. And it's got here, that it was resistance here, and now it's support within group 2. So the group 2 over here, when this fluctuates here, this group 2 is going to be the support here, and this is where we're going to leave our stop. So if the market, let's just say that the market becomes positive, it's just going to swing in here for a while. You know, I don't know how long or whatever. It may be much shorter than that, but I'm just exaggerating the point that, you know, we need something like you know, this here to take us higher. But I'm not going to move the stop any higher than where it is, and if not, I may even drop it down a couple of points here, not a biggie, depending on the structure that we get with all of that. But expecting this to, you know, play out across this particular level, and we'll just wait and see how that goes, because as I mentioned, this can be counted correctively or impulsively. Fortescue is a little bit better in that you know, it's got a few other things going on and so on. So, but we've done all okay here. We've got half position here, one here, one here, and here, and a stop here. I don't want to bring the stop any closer at this point. The idea with this at the $20 mark here is really, we're going to see it get here, and then we're going to see it vibrate across here as well. So we also need this 18 here, you know, so we've got, when we're talking about 20, it's a little bit wide here for this, but we can still start with this, and we can bring it back into place a little bit later on with this, but that's group 1 above. So somewhere this will you know, react here, pop up here, and then have some sort of correction in this particular space. That's why we'll need to leave the stop out of the way here. Now, I don't know if that's how that's going to play, but it's going to be something like that. We'll nail it down a little bit better, of course, but that's the space that we need to give it at 20 here, which is a major level. So yeah, we're doing all the right things at the right time, even though I don't know what we're doing, so to speak. Yeah, it's not probably a good look, is it? But yeah. Yeah, all good. Okay, the Aussie dollar. Let's have a quick look at the Aussie dollar. Aussie. There we go. So, yeah, I know that we've got it a bit different on our website, but and it can be viewed bullish here, but it does count quite nicely as 1 and 2 and 3 and 4 and 5 down here. So we need to understand this. We're expecting it to, you know, play off that a bit. So we're kind of thinking as an A and a B and a C for wave 4. We could go long above here, but we're a long way away from that. We were talking about having 5 waves in here, and then the retracement level here. Obviously, the 71 is really, I mean, of 72, you know how much I like 72. So, but with a 71 here is the floor. So if it becomes the retested resistance with a classic trading levels pattern to the downside, then we'll need to be short at that point. So we may get something simple like that, or it may come above the level and become a little bit more complex at the 71 across here. Eye on the prize is this low and the second low. If it trades above here, then you can get this whole pattern here again, all wrapped up into this smaller version here, so you can refine your entry again at that point. So it's a matter of working that trend and that space there. So let's just go in here. I did have a quick look at it. I haven't done a lot of work on it, but I was thinking that we already have our little 5 waves down here at the moment. So I was thinking, I mean, I only sort of guessed this a little bit. I haven't had time to really pull it apart, so it might pay to do that. But what I did notice here is that we could look at this as 1 and 2 and 3 and 4 and 5 here, then an A wave, a B wave, and a C wave down here for the B wave somewhere down here, and then have a C wave up here for this wave 2, and then we come down at that point. Now, if I've made a mistake, we could use that pattern that we just looked at. So we've come down for the arrival, even though it's sunk in, we've come back. If the market comes down again and makes a new low here or something of equivalent and gives us that, then we can start using, you know, that pattern that we talked about, you know, start working it from that point there. But based on that 5 waves here, we look at this as an A and a B and a C here, and then another little 5 waves up. So you can just grab that there and mirror that over here and try to count 5 waves in that last little move here. But what you're looking for once that top comes in here, of course, is you're looking for the 5 waves. So you're looking for for 1 and 2 and 3 and 4 and 5, somewhere up here. The 15, the 5 would be a nice number to come to. And then what you need to do is just try to, do your best to have, and you might need to go to 5 ticks or something like that, but you look for that first 5 waves down. That's going to be your saving grace for your setup at that point, if you can get that close. But just sometimes it's easy to see and sometimes it's not, but going into 10 ticks and 5 ticks and that, it starts to really stand out, yeah. So anyway, that's that. So we can look for a short trade, but yeah, definitely look for the short trades on any breach, or look for the resistance at this point. But when you think about it, if you can get 1 or 2 small positions up here and then get some under the level, well, then you've done reasonably well. You don't have to be greedy. You just have to keep, be a little mouse and just keep collecting it and stuff. The pennies make the pound, so to speak. If you go for the big bucks, then you kind of, I don't know, you just never make it really. You get caught out too much. I've been around since the 80s, and I've lost my fair share of trading accounts. Don't worry about that. I've done my hard yard, so I'm very, I don't like having, I don't mind having a small loss. I'm a good loser, like I said, and you've got to be a good loser to learn. Otherwise, you're just too emotional. But the trouble with a loss, it's, you get them and you don't have to be emotional about them, but the less of them that you can have, then your recovery time, which is your profit time, is much better, So, if you trade 10 contracts here, well, then just put in 1 or 2 here, and get a few on this side and a few on this side. And then, if this is correct, then wave 3 here is going to be longer than wave 1. And then you still got wave 4 and 5. So it's looking pretty good, at that point. Now getting from here down to 68 or something. Let's just have a little look at this. Let's just go here. Would we get to 68? 69 would be probably practical. It's going to be a bit of a rough journey there. Probably the length of wave 1, which is roughly about there anyway. So yeah, 69. We'll see. We've still got to figure out that this, can have a low in place here as well. But taking that low out here, that's obviously the safe trade at that point. But coming into the 70, you're definitely going to get another bounce. It will probably retest a bit higher. Alrighty, I'll leave it at that. Thanks for tuning in. Cheers.